Welcome. Um, Today we are not expecting much from the pound and yen relationship. We are looking at what could occur during this phase, which is the advanced GDP. Okay, quarter over quarter. Now the advance is considered to be the most impactful release from the GDPQ over Q. Okay. With that being said, let's see what would occur, but I'm not going to see a very impulsive day for the pound yen, except there's going to be some relative influence coming from the US dollar news, the US news from the GDP. Okay. With that being said, let's see what is going to happen from the technical aspect. On the technical aspect, before we delve deeper, I want to shed more light on the trade we took that was yesterday. Just 1 second. Okay. Yesterday we were looking at taking sales on British pound, Japanese yen because of what was said in the previous video. So if you had not watched it, I crave your indulgence to do that. Go ahead. What are you waiting for? Watch it, then come back, continue this. It gives a better understanding of what I want to explain right now. Okay, where this is the resistance level on the daily time frame, and this also coincides with the arrow 2, which is the resistance 2. Okay, I was looking at, okay, we don't take a hope kind of bet. We want price to show what it wants to do, then we respond, not to react. We anticipate and respond based on our anticipation. Then we do not react based on impulse, like, oh, price is going down, let us take sell. Oh, price has dropped, let's add more sell positions. No. Okay. With that being said, we looked at, okay, the impulsive leg had taken out two strong zones that could inhibit or stop this bearish momentum. After taking it out, you see these bottom wicks showing weakness from the sellers. There was correction leg or corrective leg, and if you look at this very well technically, this is impulsive, this is corrective. What happens when you get an impulsive versus corrective leg? Continuation of the impulsive leg. Okay, it's like saying if you have strong sells plus weak buys is equal to what? Another strong sells. Okay, this is John's equation. Okay, but this method should not be crammed like an equation where you have on the back of your mind, oh, if I see a strong sell, oh, let me wait for retracement. If it's weak, I need to continue the sell. No, this is a general equation, just like the almighty equation you learn in mathematics. The almighty equation is very good, but that does not mean that you must use it in all scenarios. No. Okay, it doesn't mean that you must use it in all scenarios, because using it in all scenarios means that we do not understand what price is doing. Okay, so with that being said, this equation is like this almighty formula. The only difference is that the almighty formula is good to be used for distinct equations. You don't use it for all mathematical expressions. The same way you don't apply this equation of strong cell plus weak by equals to another strong cell in all scenarios. Some criteria have to be met. Okay. With that being said, let's delve even further. So let's look at this now. We're anticipating further bearish momentum, and it played out beautiful. Now someone would say, why didn't you sell at this point? Because price retraced to where there is imbalance. Now there are different trading methods. Those who trade using the fair value gap would say, okay, this is where I would have taken my sell, stop loss here. Every trader have their technique. Okay, I prefer this technique because it means that I am waiting for my confirmations to be met. One confirmation is seller's breach, another confirmation is weak retracement, another confirmation is where to enter. Where to enter is as important as where you place your stop loss. Where you place your stop loss is as important as where your TP would be. Okay, no one is more important. If I only consider where to place my trade, without considering where to place my stop loss, then I would not mathematically know where to place my TP. And if I don't know where to place my TP, what happened whereby price retrace or retraces and comes back to my entry would be a wasted effort. What do I mean? I prefer to take sales, okay, take my profit, price retraces, I add another sell position, take my profit, price drops, retraces, I add another sell position, take my profit, than to be in the sell from here to here. Because mathematically, entering one position from here to here is 1, entering another position from here to here is 2, entering another position from here to here is 3. But for you to have 3 over 3 means that you need to wait for all criteria to be met. But entering from here, and even if it drops to this point, you need to make 3R for you to equate mathematically to this 3 over 3. Okay? Which means that this would appear as a day trade or a swing trade, while this could appear as a day trade, sort of like a day trade with a scalping vibe. Okay, so with that being said, this is what I was looking at, and price played out beautifully. Hit my TP, dropped to this second level, which is 159.690 price level. Okay, now let's go to price and look at what price did. Let's look at this technically. This is where my ultimate price, which is 159.690. Now let's look at the chart. On the 4 hours time frame, and let's expand this. Okay, now if you look at this critically, this is where I took my first TP. This is my ultimate TP. And what did you notice? Price came down to the ultimate TP and retraced. Now, this is what I was talking about, being very conservative. Is what if I had said, oh, I'm trying to get to this level, because this is the overall base I was looking at, that this is where price should react from. But because I have known that the algorithm has a different plan, whereby if someone wants to be greedy, it takes even the little that it has given. Okay, with that being said, what occurred is that someone has to technically observe that waiting for price to drop here would imply that even the one that was given from here to here could be taken from someone's hands. So what I prefer to do was take my money from here to here is my leverage, take it, wait for price. If it continues, I wait for another day, get retracement and continue the bearish dump. But since it didn't occur like that, what I had to do was take my day. You understand? Take my profit, take a day off. Look at, if I had waited for price to continue dumping, what happened? Stop loss. You know what is more annoying is seeing that price went in profit. You had a very good area to take something off, but you left it. It came to break even, gave you another opportunity to close your trade, which is this, what you call this kind of watery, kind of say, oh, this wants to continue. It gave you another opportunity. You left the trade running, and the next thing is SL. Now, with that being said, you notice that most persons overlook the influence of taking what is available versus trying to catch what you anticipate, which is why greed is a pain for most losers, because it's greed will make you leave what is on the table because you want to get what is in your neighbor's pocket. Okay, you're leaving what is available available on the table as a stake, and you're eyeing, oh, this person might have more, let me take what is here and what is available in his or her pocket. That comes into the trading psychology in the last video that I published. You look at your trading system. Okay, your trading system, which could comprise what is your allowance based on risk management, what is your trading psychology, okay? And what is your trading strategy? All of this forms your trading system, okay? These are the three foundations, three tenets of trading profitably. Okay, now I could say, okay, let me jump on this buys and join the rally, but some criteria has not been met, so I'm going to just stay out of it, which is why you see how price is printing. Now, if it goes up, it goes up. If it comes down, it comes down. It doesn't matter. What matters is meeting our criteria. Okay, with that being said, let's look at further action. If you remember, let's rehash some things we discussed last time, which is on the daily time frame, we are looking at what the, for you to trade conservatively and profitably as well, is to look at how would you trade versus how would other traders look at price at this particular stage. For instance, before these three candles printed, before this bearish candle, this bullish candle was the last candle. I was looking at, this is resistance 1. Most traders would have placed sell around here or at this top here with their stop loss above this wick and for price to drop. Okay, just like what happened here, most traders would have placed buy here with stop loss below this wick, anticipating price to rally. Okay, now since I know most traders would do that, why do you think that most banks, institutional guys would not already know this? Okay, they already know this. So you need to have an edge. What is your edge? Thinking what they will think, then adding parameters that give you a refined outcome. Okay, I could take this buy, but have you noticed the weakness in these buys? Here, this candle is clearly telling us that the sellers tried to push price down, but the buyers overtook the talk. The buyers are trying to push price up, but there is weakness, some disinterest from the buyers at the moment because of the volume of people waiting here to sell. So if there is an overpower of the sellers by the buyers, all we got to do is now respond to that overpower by riding along with them. So there are three different scenarios involved here. We could catch the breakout leg, or we catch the retracement leg, or we catch the continuation leg. 1, 2, 3. Either one of them. So why be greedy to want to catch from here to here, or to anticipate it to break out of this zone that it had rejected before? You understand? So the technicality is printed right before our eyes. Like my friend will say, Naveen Prithyani, the candles you're noticing is the receipts of the transactions, meaning that this is the receipt showing us that sellers wanted to sell at this level. Buyers want to buy around this level. This is a fringe zone. A fringe zone, which is anything can happen zone, is also referred to as a money spot. Buyers could overpower sellers. In other vein, sellers could overpower buyers. So this is a zone to wait for either a break to the downside or a break to the upside. Okay, with that being said, this is for British pound, Japanese yen. The next thing we are going to be looking at is gold. Now, I've already stated this before. Gold is overextended on the buy side. So we want some breather, meaning we want to see some sellers coming into the market for buys to continue. So it's either here or deeper retracement to here, or even deeper retracement to here, or just see some sellers printing some bearish momentum, because the act of trading is a zero-sum game, which implies that for us to buy, there must be people to sell to. You cannot buy without people willing to exchange your goods for theirs, and you cannot sell without having somebody who wants to buy. And if someone who wants to buy is higher than someone wants to sell, the price of things will drop. Why you see the price going up like this is because you have people willing to sell and few people willing to buy. So people are trying to like, oh, it's just like diamond. Diamond is more expensive than iron because diamond is scarce. So the price will go up. The same thing like gold. But if gold becomes surplus in the market, the price drops. But there's also a psychological glitch in the matrix whereby when the price goes too high and no one can afford it, you just say, okay, let me sell it at a fair value, okay, fair market value so that people can buy it, so that I can get money out of the system. So what we are waiting for now is fair value because price is already extended to the upside. Taking buy anywhere from here will be pushing the luck. So we want to see some retracement, then continue the what? Buying spree. Okay, so that is what I'm looking at on gold. The last but not the least is Bitcoin. For Bitcoin, we are going to see more bullish momentum because, like we said last time, around here was a fight, just like what you notice on British pound, Japanese yen. The buyers and the sellers are adding their bets on the table. Whichever one overpowers, you see this impulsive leg. Now, this is the impulsive leg, but the problem with Bitcoin is that Bitcoin is highly speculative, which is why you don't really see long corrective legs or deeper corrective leg or long consolidation phases because of what the problem with Bitcoin. So I'm going to stop here for now so that I can do some other stuff. This is all I can do for now and create more bullish momentum. Baraka Bashad. Peace.